Hey everyone, Jim Fitzpatrick. Welcome into another edition of CBT Now right here at CBT News. Today we're joined by Erin Keating. You've seen her here before on CBT News. She's the executive analyst at Cox Automotive to break down the latest trends in new vehicle inventory pricing and sales as we head into the holiday season. So Erin, thank you so much for joining us once again on the CBT News. Very much appreciate you taking the time. And
Always good to see you, Jim.
yeah, there's so many things going on right now in automotive, and then throw in the holidays, and then throw in the NADAs right around the corner, and the auto industry is
Sure.
like ready to bust. But you noted that inventory levels are rising, but still below last year's levels. How would you characterize the current balance?
I think, well, one, we have to remember that tariffs have absolutely impacted manufacturers' decision on releasing vehicles back into the wild, if you will, because they needed some time to catch up and figure out how to set MSRPs with the uncertainty around the tariffs. So some of this is showing just real production discipline by the manufacturers, and some of it I think is a result of them not quite knowing when to release the vehicles. And we even saw that with model year 26s coming far later in the season, if you will, than we normally see them. It feels like a pretty balanced inventory, though. Our day supply isn't wild. We tend to like 65 to 75 days is feeling pretty balanced, and certainly there's plenty of brands that are on the higher end of that. So 88 days is what we're sitting at right now. It doesn't feel wild and crazy. We had, of course, a lot of news, which I'm sure we'll talk about in a moment, around the EV inventory
Oh yeah.
and how that drove sales.
Oh yeah.
But it does show discipline, I think, and it sets us up for a decent end of year sales situation.
Yeah. What does this suggest about automakers' strategies as we close out 2025?
Yeah, I mean, I think for the most part, they're going to try to see, how does sales push through November and December now that we're not going to feel the heat from the pull ahead in EV sales.
Mm-hmm.
And they're going to let that go ahead and see what's the natural demand there. And you know what? The US consumer continues to show that the SUVs, the full size pickups, pickup trucks, these are all still vehicles that they're very much interested in and the well-heeled consumer can afford. And so I think automakers are going to and have shown that they're transitioning to pushing more of that production and pulling back on the segments or the vehicles that just simply aren't doing as well.
Okay. Speaking of which, some brands like Cadillac and Jeep are seeing significant increases in days supply and inventory. What risks and opportunities do these shifts present for manufacturers?
Yeah, I mean, Jeep's a really good example. We knew that over the last 2 years, they've really struggled. And with Antonio Velosa coming into the brand
Mm-hmm.
and having new leadership over Jeep, this is more of a transitory inventory level. I think they're going to have to try to sell down that older metal that is piling up on the dealers' lots, but they're on a product offensive right now. And this is also the week of the LA Auto Show, and
Yeah.
I don't know if you've seen your inbox, but I've been getting one after the
Oh
other
yeah.
of media announcements
Yep.
around Jeep, and they've taken some pretty aggressive, swats at like their pricing and their lineup. And so I think, for them, they at least saw the strategic writing on the wall that they needed to really right size the business for
Mm-hmm.
Jeep. Cadillac, they're still able to sell those higher end vehicles, but their EVs are troubling. And so I think that's also averaging out to keep their inventory inflated. But along the lines of any manufacturer that's seeing significant increases in inventory means that we're going to start seeing some of those manufacturers probably handle incentives with more of a knife versus a scalpel, if you will.
Mm-hmm.
And then the others are going to come in and again use that metaphor of using a scalpel, being a lot more focused on models that need the push, and then continue to try to hold healthy margins on the ones that are selling easily.
Yeah, for sure. Talk to us about incentives that are out there, because obviously I come from the auto industry, as you know, and man, if you want to get rid of inventory, just throw some incentives on there. Whether it be from the dealer level or the OEM
Right.
level, but in this case, it's the OEM level, right?
Yeah, absolutely. And I mean, the OEMs, I have to imagine, are a little bit exhausted by it because of the amount of attention they had to put on incentives to move the EV
Yeah.
metal off the market. And so for sure, we saw a decline in incentives. And again, it varies. So there's pockets where we saw increases, but overall, we're lower on incentives this month than where a little bit lower than last year as well at this time. And so I think that's probably going to continue. I think November will be a telling month of sales. And so we might see
Hmm.
some quick action in December if we've got additional inventory that we need to move. But for sure, manufacturers are also gearing up for 2026 that might be a little bit tougher. So I think that discipline around incentives are likely to stay. And again, that well-heeled consumer is showing that at the higher end of the market, incentives aren't necessary.
Yeah, yeah, and very interesting. According to Cox Automotive data, average listing prices and transaction prices dipped slightly in October from September, but remain higher year over year. What are the main drivers behind these pricing trends?
Yeah, and so I mean, 100% EVs were driving our average transaction price
Okay.
higher over, say July through September
Hmm.
because they're just more expensive models that are available on the market, and a lot of them were being, pulled ahead in demand. So those were driving the price increases. In general, we've seen our ATPs go up on a normal inflationary trajectory, 3, 4%. If we're sort of nodding towards the 4 to 5%, and I think that um,
That's all
losing
right.
my words here, but the difference between the 3% and the 5% is where we might start seeing like the tariff impact. Like, okay, we need to start increasing prices slowly but surely. But otherwise, the increase feels relatively normal for inflationary pressures on markets like the automotive.
Yeah, gotcha, gotcha. Despite some of the softening, large SUVs and pickups continue to perform well, while minivans and certain EVs are under pressure. What does this say about evolving consumer preferences, and how might these trends shape automakers' strategies?
Yeah, I think, we continue to say that the US market is one that's focused on full-size vehicles, whether that's pickups or SUVs. We know that when affordability crunches came, mid-size SUVs, even compact and subcompact SUVs continued to win the day. Minivans is a really interesting one because, man, for a long time, those were actually solidly just chugging along and hitting their sales numbers. But I think these full-size SUVs are becoming more and more like minivan as far as capacity and ability to move our families around without looking like a minivan. So I
Yeah,
think that we're going to continue to see those go down in sales and continue to see manufacturers push towards the cars that Americans continue to signal that they want. It's not noise in the market anymore. This is an absolute signal that consumers, or at least those that are in the new vehicle market, want the bigger vehicles that have more capability, more utility.
yeah, yeah. Luxury and high-priced vehicles are expected to do well during year-end sales, but we know that they don't account for big volume. How are mainstream brands positioned as affordability becomes even more important, and what segments are likely to see the most activity?
You're right. It's interesting because we always know that December push normally does heavily weigh towards luxury vehicles, especially in the gifting market, if you will. I would certainly love, a lovely Audi RS6 Avant showing up in my driveway with a big bow on it. But to your point, mainstream vehicles, mainstream manufacturers still need to get their volume in. And I do think that, a couple of really good examples are like Hyundai coming out. They're really becoming an accessible luxury brand, if you will.
Yeah.
And I think more of the mainstream brands that are paying attention to content, to interiors,
Hmm.
to design finishes and technology are creeping up there to be perceived as luxury vehicles, but still accessible at affordable prices. So
Hmm.
I think that's what we're going to continue to see from manufacturers is trying to figure out how do we fit within what the preferences are, but keep our prices still a little bit higher than people would like, but affordable for those that are in the market and may not want to go all the way upstream to true luxury.
Yeah, yeah. With tariff costs, expected to rise in 2026, how are automakers preparing for potential price increases, and what effect could this have on both inventory management and consumer demand?
Yeah, this is the tough one, Jim, because this is the one that's been sitting around their necks all year long, waiting for, crystallization to happen in the actual tariff policies. And I know that the IEPA is out there with the Supreme Court, doesn't necessarily impact automotive, but certainly impacts the bigger picture of tariffs. So I'd argue that most manufacturers probably still feel that they're in an uncertain space with what tariffs are going to look like even going into 2026. Certainly, we've seen that impact their supply chain through rare earth minerals and just geopolitical plays at overall.
Yeah.
That said, I think most of them have been working towards, again, if they can pull back on that expensive EV production, start shifting production to more profitable models, they might be able to continue to hold on to the price stability, because they'll be able to tuck away that cost somewhere across the line. But we do anticipate the prices are going to rise in 2026 as a result of the tariffs. They just may not be sky high as everyone expected.
Yeah.
We've seen destination fees starting to rise. We've seen some changes in trim and options available. So, quote, decontenting or shrinkflation might be happening with some of the vehicles across the lineup. But it will be an interesting year to watch and to see how they actually really respond in the market.
Yeah, that's for sure. You've described the market as one of moderation, not retreat. What gives you the confidence in the industry's resilience, and where do you see the greatest opportunities in the coming year?
Well, I would say your audience, the dealers out there, are really great at reminding us of the resiliency of the industry. So if nothing else, I have the utmost faith that the dealerships are always going to continue to work really hard within their communities to make sure that their business keeps moving. And honestly, I think the automakers recognize that in how much the dealerships do affect and impact and work for keeping the business going. And I do think, again, that K-shaped economy that we've repeatedly referred to, those well-heeled consumers, they are seeing the wealth effect still in play. And I think that's going to keep them coming back as far as new vehicle inventory. So I think we'll see some stability grow there. Are we going to hit 17 million? No. But 15 to 16 million at more profitable models and moderating what they're doing in alternative powertrains, I think is probably a sustainable business for now.
Yeah. As we move toward 2026, what are the key factors or wild cards that could disrupt the current sense of equilibrium in the new vehicle market? Are there early indicators that you're watching right now that might shift or signal a shift in direction?
Certainly, we did just have the government shutdown, and there's some data missing. And so we all are sitting a little bit on the edge of our seats to see, is there something that's going to get uncovered that we didn't know about? We know that the Fed fund rate may not come down, although auto lenders have started to reduce their rates for people. So I think that there's some question around the overall health of the economy that still weighs heavily in people's minds, despite the fact that the stock market continues to perform. So those are things that, of course, from a macro perspective, we're going to keep an eye on. And then again, regulatory questions that are out there. The Trump administration has been very prolific with what they've tried to roll back or change, but a lot of stuff is still out there under legal review. And so there could, we could get a shocking decision in a case here or there that may really require automakers, especially in the EV space, have to rethink what their retreat looks like. And that's just a total unknown if that's going to come to fruition or not. And then, of course, we have midterms. So, a lot of stuff in administration can still change. And that's something we always keep our eye on, because it's those extenuating circumstances that often impact an industry like ours.
That's right. It is. The midterms will be very interesting to watch with all that's happening right now. It just seems to be so much to try to keep up with coming out of DC right now. It's just unbelievable, and never
and
a dull moment.
Our industry is heavily impacted by it. It's why I've always loved this industry, and it's actually been a fun time to sort of explain to people, like, why would you work in automotive? Because this stuff matters, and you really,
that's right.
It's a really great way to stay on top of what's happening and wanting to get civically involved in what's happening, because you really see its impact at all levels.
That's right. Erin Keating, executive analyst at Cox Automotive. Thank you so much for stopping by CBT News. Very much appreciated. I know our dealer audience will get a lot out of your visit with us, so thanks so much.
Great to see you, Jim. Take care.
Great to see you. Thanks.